from yesterday. I'm assuming the room audio is still good. All right, testing audio for YouTube. Testing audio. Yep. Coming in hot. Okay. All right, y'all. Good morning. Welcome to another Engineering the Markets. As y'all can see, it's gotten a little colder this morning, so I am bundled up a bit. But thanks for joining me today. Happy Tuesday. It is October 18th, 2022. Hopefully everybody's been enjoying the trading session from yesterday. We had a little bit of a slight bullish bias on a relatively calm overall S&P. There were a couple of stocks that were leading and certainly trending throughout most of the session. And I think a lot of edge was found through kind of determining where those candidates were, as opposed to a high correlation where everything is not only directional, but moving in one bias at a time. As you can see, with our gap up open, we're looking to be slightly outside of the expected move this week. Notable because we just started the week, and obviously volatility is only expecting about 120 points for the SPX to open on a Tuesday. Outside of it is a little bit similar to what we saw back in this week here, where we started with a breach. We actually traded through that breach for a couple days, and then we collapsed back inside. Now, we do have earnings this week, so I'm not really expecting the same price activity, especially with the stocks in play and with their earnings. I'm expecting a lot more volatility, but I think it's going to be mostly encountered overnight, and we're very likely to see some gaps this week, significant ones that lead us either outside of previous session trading ranges or just back into notable zones where the S&P has traded before. And obviously we'll look at the core trends that are starting to change in the SPX. So that's where we are this morning. Little noteworthy given it is Tuesday, but as we've seen, we can still close within the expected move. It's all about what we do on Friday relative to the week of breach that we have. So let's take a look at some interesting developments based on this gap down, this gap that we have this morning. Yesterday, you'll recall, I've spent some time talking about the VPOC that has been established throughout the SPY over the course of a couple of weeks. This has been a very noteworthy area of trade, and throughout the procession of buying and selling, there's a lot of open interest that's sort of developed into this range. We're not necessarily completely outside of this area. We've seen breaches to these levels before. Once again, it's that same 3-day period where we were slightly outside of our trading range. But similar to what we saw there, the market looks to be moving away from this VPOC zone for now. And I would anticipate a little bit of a bullish drift into this region before seeing any sort of convincing sell-off, along with the breaching of trend, which I've kind of drawn some speculative channel support and resistance to look at for today. I think optimistically, if the market were to rally off of this gap up open and basically transition through this volume profile ledge, we'd be looking at about a 380 SPY near the end of the session. Now that's pretty optimistic overall, especially since we're still trying to get through some areas that have been pre-established. but it is where the channel is speculatively targeting. And I think if you're looking at channels in formation, you can get a lot of edge knowing when they're starting to establish, and then ultimately looking to see how far can they go. What is the true high to low or low to high target of a trading channel. We've seen this before in either big picture sentiment. Something like a natural gas is kind of shaping up to be interesting because it has ran to the bottom of its channel. Nat gas has been in focus as at least as a commodity play. And once again, even though natural gas is in a downtrend, the channel structure here, while speculative, can provide really opportunistic risk to reward once we start to move away from it. And remember, the reason this is speculative is because there's no structural reason to assume that this is going to hold yet. The only reason we can speculate it is based on the highs, and those have been already set by the market. Whenever you get some of those anchor points, you can speculate based on one swing low, in this case, the low end back in July. So channel trading is that risk to reward element. Doesn't necessarily mean you step in immediately, but you can start to look for the keys and the clues that things are starting to change. For example, one of the key elements here that started to change this very dramatic downtrend was just a couple of days of trade and then a breaking back to the upside. That obviously set up a much more significant rally. Of course, targeting mid-range can be opportunistic as well, because you can think about selling premium down at these lows or just being a little bit more neutral as the market can trade sideways or simply move up very slowly, not necessarily see more downside, but also not be a super bullish chart in the future. So just kind of showing some channel examples. There's been quite a few that we've experienced throughout this past trading year. You look at something like Oxy, you can see where the edge lies in this marketplace, whether you're a buyer or a seller. You essentially want to be trying to be bullish near the low end. And even in the deepest of downswings, there has been more opportunity to switch your bias back into the channel structure simply because it's what's working. And until that breaks, you make those assumptions and basically trade the price action in between. So a couple of examples of how channels work. And remember, that speculative nature here, whenever you're looking at building a channel for the first time, you really want to see things like a previous trend starting to break structure and some of the larger buy and sell swings anchoring your channel, at which point you can start to speculate in the future where some of these levels are going to be. This one's not necessarily absolutely perfect, but it is one that models the approach of channel trading. So as I shift back into what's in focus this week, I think first and foremost, we should look at Netflix. Very much an earnings trade that a lot of people are paying attention to. And as I mentioned yesterday, Netflix is not necessarily going to be as big of a market mover based on its market cap weighting, but it has enough volatility to be at least an impact. And, that overnight gap could form simply based on what Netflix reports and some of the sympathy that other companies can take depending on the report. So we'll start off with the obvious here. Let me kind of take away any sort of skewed moving average. So the obvious portion here is, what are the technicals? And I think very simply, last two earnings reports ago, a gigantic gap has formed. This area is essentially a void in price. And even if you're going back historically, there really isn't a lot of trade that occurred near the lower end of those levels. This is kind of where previous supports formed, But as we fell through it, there wasn't much below this region. That's kind of where we've been over the past couple of quarters. So this zone, this area that Netflix is pressing against this morning, is interesting because if we're looking to trade through it, it's going to require some volume. Getting away from an established area where people are putting their risk and essentially where the chart has been the most recently takes effort, and it takes time to fill such sentiment based gaps. This is a market saying that the company or the stock itself was not worth what it was prior to that announcement, so they repriced it. Getting back into those areas can be challenging. It requires a market to change its bias. It also requires a little bit of a catalyst, and in this case we are looking at a new earnings cycle. So let's talk through some of the scenarios based on those levels, which for now I'll kind of refer to the gap as about 245. 250 would be sort of your high end based on some of these upper bound tests of the region. Technically, the gap is closed in regards to where this candle opened, or sorry, the gap open is based around 245.2. So any price activity that's within that open price is trying to breach into the gap region. It's specific where the gaps actually open. If you're looking at the top side here, the open price, while it is the lower bound of that candle, is not really where the gap forms. In fact, it starts at the close price. So 348.61 is where the gap opened and where it formed, even though we call it gap close because it's the candle that closed before the gap. Looks a little weird, especially because a lot of people will just look at the lower bounds, but technically the gap formed when this candle closed and when this candle opened. That's the whole range. So those regions are worth noting, but you can also go ahead and mark just the lower bounds of this area. Now, why would you do this? That's a pretty far away target. It's obviously not within reach at this moment. We'd want to be looking at the earnings coming up and see, is there any potential to achieve half, a third, or even that full gap region based on what the option open interest is predicting, and also based on the expected move. So first things first, let's look at what Netflix is pricing for its earnings. And that's going to be based on this number right here. Approximately a $30 expected move. Netflix is looking to open at about 250 today. It can obviously trade higher or lower today. So this number can be affected by what Netflix trades and what price does it close at. But for now, we're looking at about 30 bucks, and it might be a little bit higher into the actual earnings itself. Another way to get this number, for those unfamiliar, always be looking at your at the money strikes. So Netflix technically closed at 245. If you're looking at a 250, you'll get about $30. And a 245 might be a little bit cheaper, but rounding up here, it's about 30 bucks, no matter which strike you're looking at. The overall close to at the money premium has an equivalency with the call and put parity pricing about $30. So those things are important. Just knowing what the market expects. What sort of volatility can we anticipate into this event? And if you're someone who's trading the actual earnings reaction, knowing this can help you. If you're looking at strategies that allow you to move away from where the price closed into an upper or lower extension, technicals are good, levels are good, but the expected move tends to define a lot of those extremes that we see into the earnings event. Those big wild candle swings, for the most part, will move about the expected move, and sometimes a little farther, sometimes a little bit less. But at the very least, you're not going to be looking for a $5 to $10 move. You're going to be looking for a 20, 25, 30. You know roughly what sort of volatility to expect. And if it goes farther, it should be directional, and hopefully your bias allows you to capitalize on higher targets or lower targets, depending on which way it moves. So that's the first piece of information. You should always be gathering this if you're going to trade earnings. And if you're going to trade any option strategy around this, knowing those numbers can help. So, what are some other notes you might want to take from here? Netflix has been bullish the past couple of days. In fact, if you're looking at just the past 3 days, this has been a pretty significant move on the order of about 18%. And that's basically from low to high from last week. Ever since the CPI came out, Netflix has gained about 18%. That's pretty dramatic, even though the company is not holding the same market cap as it used to. So from that perspective, there's obviously a bit of a bullish rally into earnings. And whenever that happens, especially when the market itself is going through extreme bouts of volatility, we sometimes see things like a couple of open interest nodes that fall in the money, or they become intrinsic throughout that move. If you look at this from the perspective of a couple days ago, this number might have been lower. This number might have been lower. But overall, these two strikes were overcome by the price, aka they were out of the money, or slightly out of the money to speculative a couple of days ago. And throughout this past 3 trading sessions, those are now experiencing intrinsic risk, which basically means that the move in premium is a bit more dramatic whenever the stock price moves up or down. If Netflix moves up $1, these types of calls, especially ones holding a significant delta, as we switch into delta just to keep the numbers in mind, it's 230 and 245 right there. I might have, some of the, I'm drawing on this thing, it doesn't necessarily keep it in line. So 230 and 240, yeah. So those two numbers, those two strikes, they hold significant delta. There's a 67 on 240, so every dollar plus or minus 67 cents relative to the delta. You're not going to see a ton of gamma exposure until we get closer to Friday. That's really when the gamma exposure is the highest. But you look at these 230s, the ones that held about 10,000 open interest, 80 delta for these. That's significant. That's almost synthetically long Netflix. And while this is not necessarily a bias towards the move, what it shows you is that if Netflix moves higher, the market has a lot of bid or inventory that is already assessed into a long exposure into earnings. And that can actually fuel a little bit more momentum, because those positions are not necessarily newly in the money. They're actually just holding some of the synthetic value that we're seeing today. So the reason I like to kind of note this is because as you look throughout the rest of the call chain, there is no other 5-digit open interest as of yet. Basically, every other high open interest is a ladder. It's high relative to maybe the ones around it, but that's simply because it's every $5. And as you ladder up, the next major one to kind of focus in on would be maybe 270, and then absolutely start looking at 280, because that's the expected move. That's your bullish lean for Netflix today based on what the IV is indicating and based on where some of the higher OI is that's out of the money. Now you can do this on the same side with the puts, but what you'll notice is there's not really a lot of put premium that is yet synthetic, aka not a lot of in the money open interest for Netflix yet. Most of it has been built early this week and even into last week, which means a lot of the trade has occurred lower. And because Netflix had that pretty major rally off of about 215, you'll notice that some of our higher nodes sit much lower. In fact, our largest one is sitting at about 225. Arguable whether they're using the expected move here. It's going to be somewhere in between these two strikes, 220 to 225. So it's an assessment of who is already profitable. Technically, the longs that have been bidding into previous expected move boundaries, the market has rallied. And in their favor, they can decide to take off some of this risk today. You know, these synthetically long calls are technically profitable. Some of that might start to unwind today, and you might want to notice that movement in option trade if you're looking to trade Netflix today. That would be something where you're coming to a time in sales and just observing if we're closing or buying more call sort of speculative premium. Sometimes they even will roll it into a further series or even out in price. And that would be something where we'd see the volume increase, but farther out in price, somewhere within that technical gap. Now, as we kind of look into how to trade this, a lot of technique is typically recommended or sort of suggested for earnings, because as we know, one of the key elements of earnings is the implied volatility skyrockets. The market is trading much more significantly in this one series because they need to protect themselves against a binary event, a sort of if-then scenario of the market going up or down. And as traders, we want to try and take advantage of that as best we can. So one of the things we can do is look to sell this implied volatility. And a lot of technique can be involved in regards to selling maybe the at the money straddles and strangles. You know, this is a 250 straddle. You're collecting about $30, which is the expected move, but you're obviously taking a little bit of a risk. This is, of course, an open-ended straddle, so there is no protection if Netflix goes past 220 or past 280. Really, you're looking to try and collect as much of that IV collapse, and a larger than average expected move breach would put this at risk. Even though this doesn't necessarily model the IV change, this would be where your strikes are threatened, usually around the expected move boundaries. You can also look to do it in different ways. You can do something like a higher call, so a more speculative call. I can't change the put here, so go back here, delete this. So let me do a 240 and a 260. Now, obviously, you're not collecting as much credit, but the question is, what does your risk look like? Does it change? And the answer is yes. It starts to smooth it out a little bit. Now, you're still going to take a little bit of pain if the market does a breach. You're collecting less credit, but ultimately your risk is a bit wider. And that allows you to maybe survive some of the wilder possible swings and still look to have this credit come in, basically closing your trade at some sort of lower premium, aka, you know, just collecting that credit throughout the trade. And obviously you can play with these strikes. The lower you go in your calls and your puts, or in this case, the higher you go in your call and the lower you go in your put, the wider this can sort of expand. And, as you kind of model this out on a risk profile, what you're trying to do is ascertain how much risk you're willing to take. What sort of stock behavior does this particular product have into its earnings? Now, you can certainly understand why a lot of people might be afraid of going into an earnings with a undefined risk in a stock like Netflix. So a lot of traders will then look to iron condors. Those are very simple in their construction. You're really just looking to sell near the expected moves. For example, you could do something like a 225, 215. It allows you to collect about a 250 credit. And then on the call side, you try and make that equivalent. Here's about a $5 iron condor, but each side of your trade is $10 wide. It's a $10 vertical on either side. So, truth be told, if the market can close within these boundaries, this credit should come in, albeit you are having to hold this for a couple of extra days to really see that reduction. Because by buying back in the same series, you're still looking at the same heightened IV, and you're neutralizing your directional risk, but you're also collapsing some of the vega or volatility dynamics because you're using the same series. It's the whole idea that iron condors need to be carried close to expiration, or they need to be out in time so that some of that theta can kind of come in as well, even though you are looking to neutralize that through buying and selling in the series. So condors are a way to protect. They have different metrics and dynamics as to when you will see degrees of profitability. And you'll notice this purple line, as I get closer to Friday, that's really when it starts to collapse inside, unless you are literally in the middle at about 250. That could be unwound a little bit earlier. But for the most part, this has to be carried close to expiration. And that's less of what you're trying to do into earnings. You're just trying to take advantage of that IV collapse. So one thing to look into, and unfortunately I don't have a lot of time to discuss it, is taking those concepts, but looking out into a future series. And this is where you can start to get really creative with things like the high IV in the option series that you're looking to capitalize on, the earnings option series, and then just going 1 week out or 2 weeks out where the IV starts to come in. These are elevated, but they're not nearly as elevated as this guy. And therefore, if you're looking to protect your risk, using a different series will allow you to pay less for that protection. So here I'm trying to protect a 220 put. I can buy back a 220 put in a future series that caps off my risk. I can do the same thing on the call side, buy this back. Now, what you'll notice here is I've capped off the undefined risk on both sides of those expected move strikes, but I'm not using the same series anymore. I'm out 1 week in time. And in doing so, this does cost a little bit of a debit. It basically means that you're paying for the trade up front. But in this way, you're still looking at degrees of profitability if the market moves towards those expected move strikes, those about plus or minus 30 strikes. And as you can see, today's the 18th. We increase the date, that purple line starts to come in with the max profitability being realized at these 2 strikes. Even better, if this happens to go out worthless with the calls and puts sort of expiring within their boundaries, and you move into the next week, you don't have to necessarily close the 2 protective strikes either. They can be left open. And so long as your sold calls and puts are expiring, the long calls and puts are Still technically somewhat speculative, but you can have them open for essentially little to no debit. You have opened up some sort of wide, sort of out of bounds directional trade on both sides, but it doesn't cost you much. And by playing around with the strikes, you can really bring in your debit on the trade itself, along with where these protective strikes happen to be and where your risk is relative to the move. So, for those looking to really take advantage of earnings, this is kind of where a lot of edge can come in using the implied volatility. So we're going to look at this a bit more tomorrow. It was kind of a wider discussion, but we've covered some of these things before, and I do recommend looking into how to trade earnings through option plays and how to expand with different concepts and different strategies. So with all that said, my name is Jared. This is Engineering the Market. Stay tuned for pre-market prep, and if you like what you see, like and subscribe to the channel. We'll talk more tomorrow.
Good morning, everyone. Welcome to PreMarket Prep. I hope you're having an amazing morning. Hopefully, you had a great day yesterday. Good morning, Norm. How are you today?
Good morning, brother. I'm all right. I am running a little bit behind. Usually, I'm working in my office very early. Start about 5:30 at the latest my time. My wife wakes up about 6:10, 6:15. Gets kid ready for school. I take him at 7. I get out of my office at 7 after having been in here in an hour and a half, and everybody else in the house is asleep. So it's been a little nutty. I'm a little behind. Our gappers list, this is not the morning I needed to have a gappers list a mile long, but most of it's moving with the market anyway. So
yeah. It sure is extremely long here, guys. As you see, everything on here. Obviously, the SPY a little strong this morning. Well, not a little, a very strong 2%.
yeah, 2% gap on the
yeah.
SPY is enormous, and it continues to go higher.
Yeah, and it's climbing. So looking up very good there. Guys, take a quick look at some of the stuff we had yesterday on our list as the SPY continues to just crush it here. And before we do that, let's not forget, let's give Jared a big thumbs up over on YouTube for engineering the markets every single morning. So thank you for that.
As long as it's not Friday.
Yes, as long as it's not Friday,
every
Saturday,
single morning that's not
or Sunday. Exactly. Sitting at 76, a little light. We want to get to at least 250 today, so definitely help us get there. With that said, we have Roblox on deck, guys. So we have Roblox yesterday. Let's get to our 5-minute, which actually did very well pre-market. You had news that broke out there. The numbers were released of actual users, which was obviously positive. And you can see the great run that it had pre-market. During market hours, it had a couple of moves here. Not great, but I got to tell you, yesterday was a day where things just did not know what to do. There was a lot of sideways action. You see that here on Roblox after the pre-market. This was the nice move. This was where it all happened. Then from there, it pretty much goes to the flat. Neo, same thing, guys. Just one pop here at the market open. From there, a lot of sideways action into later parts of the day. You did get a nice toppy action here. Look at this beautiful drop. into the close. So that was nice. Tesla, again, it was probably one of the better trading stocks on our list. It took off nicely here, breaking out of some really, look how nice these levels are, by the way. These are the levels we did yesterday at this time, right? The 215, the 213, the 210 was the pre-market high. I mean, can you ask for levels to be any better than that, right? I mean, and if we would have went higher, I think we might have stopped at 215 on the daily. We probably could have found some more, but just look how clean Tesla respected these levels here. So very nice action from them this morning. They'll be in play again today. So already 1.8 million shares traded on Tesla. Here is Apple. Apple was okay. You did get a drop here and a recovery, but again, not as clean as Tesla. We had AMD. By the way, AMD was messy. AMD, I know you had a couple of moves here that were pretty nice, like this one here. Then from there, you had this one here. But in between this, it was a lot of up and down action. You could have been getting stopped out left and right on this thing if your entry was not like almost perfect, right? So a little bit frustrating there on AMD. Bank of America, it broke out in the morning, had one pop, and then from there, it didn't really move a whole lot. And this is what Norm and I were talking about yesterday, that even with news, it's one that might not trade all that well. And we saw that here yesterday in this Bank of America. Then we had some possibles. We had Nvidia, we had Oxy, we have Uber, and some other ones there that again just didn't do a whole lot. Let's take a look at our gappers list this morning. But before we jump into that, Norm, overall market news and stuff happening.
There are a number of reasons people are giving why we've had such a strong rally. We've said it many times. You can get very violent upside rallies, moves to the upside in bear markets. So we've moved, I think it's like 5% ish from the bottom on Thursday when we in the pre-market. So quite a move over just a few days. A lot of it has to do with the England stuff, what's going on with the Bank of England and kind of changing their tone and everything else. I think people are optimistic that might cause or be a precursor to other central banks doing it. I don't know if that's the case or not, but maybe that's what's going on. Anyway, we'll see how long it can go for. Like we already said, this is an extremely strong pre-market gap for the SPY overall. Seeing 2% gaps happens only a few times a year, usually. So 9:15, we've got industrial production and capacity utilization. 10 a.m. Home Builders Index, and at 2 o'clock, the Atlanta Fed President speaking.
All right, excellent. Thank you, Norm. All right, guys, let's get to it. Let's see what we have here on our watch list, on our gappers list this morning. As Norm mentioned, this list is just wild, extremely long today. Obviously, a lot of green in the screen with a couple of low flow stuff sitting in our gap down list. So we'll do a couple. I'm going to probably do the top 7 or so. We're not going to go through this entire list. And then we'll probably highlight some of the ones of our favorites. Our usual suspects are in here. And then we'll take it to the room and see what you guys like this morning. Let's go ahead and start here with clearing our list first. Control A, Control X is going to do that. And then let's go ahead and click on AKUS. So AKUS is up 87%.
Yeah, it's a buyout.
Yeah. So we're going to find tons of stuff that's going to look better than this today. Let's head down to RMED. We've seen RMED before, not a great one. Lower floor 1.5. Has popped up in before in our gappers list. Loves to sell off based on history here. When you got volume, at the market open, it's not a good outcome, right? Based on history here. So they're gapping up again today, 45%. Not saying that this is what is going to happen. For me, this type of stocks is just not worth watching. So be very careful on these. Again, there is definitely in play, but just be mindful of this one. AVAO this morning, buyout or seems to be trending slightly up?
AVEO is a buyout, cash buyout.
Cash buyout, okay. So they have some slight trend here, 3.3 million shares traded, up 40%. Yeah, cash buyout, they usually don't move, right? At the open, Norm? They usually...
it's $15 per share cash. So
yeah,
unless some kind of rumor comes in of a bidding war or something, I see this as dead.
Okay, yeah, so that's not gonna be good for us there, guys. Let's take a look here at CRM, so Salesforce on deck this morning. Wait, why is that's a firm? Nope, Salesforce. Here it is, CRM.
CRM just popped up, and I don't.
Mm,
They got an upgrade yesterday. Um, I'm not really seeing anything. If anybody has any news on that, that's fresh. They're talking about Salesforce on CNBC. That makes sense. All
okay.
right,
Big pop
that's a
here.
big pop.
Yeah, it's a big pop. I'm not sure
Kramer saying he's gonna.
he's gonna short
He's
it.
good. Kramer, yeah, activist investor took a position. Okay, that hasn't
Okay.
crossed my news yet, and I don't have Squawk on because I can't. It's hard to communicate with Carlos. So thank you.
Okay, perfect. All right, so let's see. Possible for now, it's a little early, but that's a big pop on that. So
Mhm.
CRM, we'll put that on there. Um, it's just a note on CRM. Again, not usually the best intraday trader unless they
Oh,
have big news, right?
yeah.
So we'll see. A-firm on deck this morning. They're up 6.6, 184,000. Not a whole lot of volume. I like the daily, and I think I'm going to like the daily on a lot of tickers this morning because a lot of stuff has been selling down and just trying to find a base and trying to see any kind of positive sign like we're seeing today. The market is pretty strong this morning. So you're going to see a lot of stuff trying to break out from areas where they've been struggling. A-firm looks to be one of those tickers. I'm going to not add it to my list unless they have any news storm that is worth watching.
I'm not really seeing anything. I think they're just moving with the market, man. A lot of these that
Yeah.
have been seriously beat down are given some pretty big jumps with these positive few days we've had. So
Yeah, so with that, I'm gonna try to look for something better that's gonna have a lot of volatility and movement. We have CCL coming up next year. So cruise lines, like I just mentioning, talking about stuff beating down, getting beat down quite a bit. Here's probably the number one stock has been just crushed. And not just recently, it's been like for a long time now. And they're popping up 6% at the moment. So I don't know about you, Norm, but CCL, even with the volume and the moves that it's making, I'm not a big fan of it as I was when it was like $20. It just seems to
traded
trade
well when
different.
it traded well in like 2020. I just haven't seen anything great out of it
I haven't
anytime
touched it. Yeah,
recently. I
yeah.
don't see any news this morning other than a debt offering, and they need more debt. Like they need a hole in the head. So I don't know.
Yeah, so I'm not yeah, I'm not a fan of this one here, guys. So we're going to go ahead and skip on this one. Let's head down over to um we have Mara on here. Mara this morning, I do see I thought I saw some other ones. Raya, I saw Raya, I saw Coin. So all of these are on here today. Again, everything moving up with the strong market that we're getting this morning. So if I look at let's see which is the best one. Maybe I'll watch one of these. Mara. Let's look at Coin. They're all looking very similar. Rye is usually probably for me the worst one. So you know what? We'll look, I'm gonna put Mara. I'm gonna put them as a possible just because I know there's gonna be a lot of stuff gapping up. I want to have some stuff in tech, some coins if possible. You know, just kind of spread the love a little bit to see if one area does better than the other. So we'll see. Heading down now, we have EVs coming up here. So we have Neo, we have XPEV, we have Tesla, which Tesla, of course. Let's waste no time on that one. That is going to be in play. Their earnings, I forgot what their earnings were, are going to be. Is it Thursday, Norm?
Tomorrow, I believe.
Tomorrow. Today is Tuesday. Tomorrow. Okay, Wednesday.
Tomorrow after
Mhm.
the bell.
So that'll be exciting. Look at the rip already, guys. Up 4.3 on this thing. 2 million shares traded. I am also going to add Neo to my list. They're already up 5.7, also doing very well here. Another ticker that has been crushed quite a bit this last couple of days. So we'll see what happens there. Not as beautiful as Tesla, but definitely it's got some decent volume. Um, what else? So XPEC, we'll skip on that one. Now I see plug on here. Just look at some stuff that might look good. Daily looks good. Like I said, a lot of daily is going to look interesting because they're all going to look very similar. The drop, trying to find some support, any strength on the market. These guys are going to want to take advantage of that. So yeah, I'll stop here. I'm gonna because it's a lot we're gonna go through. Norm, anything that's sticking out to you on this massive list this morning?
Be a couple. Nvidia, they have been moving really well the last few days. There's no specific catalyst I really have this morning, but they've been acting pretty good. Netflix, Netflix
You
has
saw
been
Netflix
moving well.
yesterday, right? It's
Yeah, it was.
wild.
Yeah. Did you look at Tesla? Oh, you have Tesla.
I have Tesla, yeah.
Amazon. Amazon's been in a straight path to the northeast this morning.
Wow. Yes.
And I'm gonna give you one more that I don't know that I would be trading just because of its price, but Fubo is on fire.
Fubo,
They've
yeah.
made a couple of changes. They were gonna open a sports book. I guess that's been tabled.
Hmm.
Um, and then I think they gave some guidance or something. So I know, and this is memeing a little bit too. So
Okay.
there you go. I just don't like $4, $5 stocks.
Yeah. I'm not gonna add it to my list neither. I'm the same thing, and you see it with CCL. Like CCL is starting to change the way it trades now that it's been like it was trading. It hasn't been trading great in a while. Norm, I agree with you. But you had a couple of days where it did okay. Like a day like today, it'll do all right. And I don't know. It just seems to be different. Phil says under 15. Yeah, I agree. Especially for CCL. All right, let's take it
If
to a
it,
room, guys. Yeah.
it's got a somewhat high short interest. I think it's like 27% or right around 30% off the top of my head.
Hmm.
So if they start squeezing, that might have potential. That's the only time I'll really consider something on at that price level if it's squeezing. Or
Yeah. It's got to have some. I mean, it's got to have some good positive news, which
just to
CCL can
think
get. You know.
this thing had been a couple of times up there in the. I mean, as recently as a year ago, this was a $35
Yeah.
ticker, and I believe it was like in the mid 70s a couple of years ago.
I know we hit 60 a couple of years ago. But yeah, just 2021 May, we were sitting at 30, hung out at 24, and it's just April has gone downhill, guys. Lost 18, lost 15, big level at 15 there. But yeah, it's just that's
Excuse me.
not been good. That's not been good. Over to our YouTube chat, guys. Good morning. Hope you guys are doing well. Let's start with Fabio giving us usual suspects, which we got some on here: Tesla, Nvidia, Amazon, Apple. It's another one that you can put on your list. I'm sure they got tons of volume. Actually, I thought they would have more volume this morning, but only 84,000. But yeah, breaking out of the daily as well. Good possible stock if if you want to keep space for other stuff you want to watch this morning. Because I agree, Nvidia and Tesla are probably better suited for this type of morning. Um, let's take a look at Jeff. You're giving us so Google. You mentioned Google. You know what? After Google did their split, I really haven't looked at it. I really haven't even been interested in it at all. And the only time it comes up is when the market is doing something like this, where you could really pick any five stocks out there that you like, and you could do very well. So I'm not sure about Google on my list, but again, a lot of stuff is in play, as you can see on the gappers list this morning. SQ little light on volume right now. It is up 5%. I'm just gonna have a hard time putting stuff ahead of some of the things we have on here, unless there's a big catalyst, right? So let me know if there's a big catalyst that we need to know about, that you saw, that you like. We can throw that on there. I do like the daily on SQ. Clean breakout here if we can get going. Hey guys, thoughts on AMD, which looks prime for a short? Oh, short squeeze. Okay.
Yeah, I responded to
Mm.
that I'm not there's no short squeeze on that because it's 2% short float, which is
Yeah.
minuscule. It's got to be way higher than that to really get a squeeze in it. That having been said, the daily, maybe you could come up with something for a bounce here,
Yeah.
possibly. But
I mean, it seems like one of the stocks that's been trying to hold for a while, right? I mean, if you look at other ones, they probably drop a little bit. They've been holding steady this 57.
one could also
You
argue it
know,
tried to hold steady at about $67 last month.
yeah, exactly,
So before dropping, and then it tried to hold steady at about 75 for a little while in early
yeah.
September.
So
So that's a tough one there because
yeah,
it's really just moving with the market right now. Semis overall are in a bad place. So
yeah. What I notice is when the stock market does well, like the stocks that are doing well themselves, just because they're doing well, and just the overall market's just ripping them apart, right? With the economy and everything, those bounce back a lot quicker. So if AMD's in that position, they can bounce quicker. But it's an overall market move. It's not AMD saying, "Hey, I'm going to go against the market." Yeah, that's not going to happen, right? Intel. Let's take a look. But yeah, I like the daily on AMD. Their volume is okay as well. Again, heading northeast here with everything. INTC this morning. Uh, no, again, without any catalyst individually for them, I don't see them. I don't see anything over the top here to add on the list. Maybe a possible, but again, I think my usual suspect list and what I have here right now is looking really good so far. But again, if you like a ticker, right? If you like a certain ticker like INTC, add it to your list. Make a little room and add it to your list. CCJ, let's take a look here. What we have, CCJ. I like the gap down. I see where you're playing here, the possible gap close to on the way up. So yeah, you need to know how to trade this, by the way. It's a little bit different than most stocks. It's not a great intraday trader, but you definitely need to know how to trade that.
I'll note too. I mean, I know Hamish. He trades a little bit different style. It's
Yes.
a blend of some technical and some fundamental news data that he puts into his strategies. So there's more to it than just the chart on what
Yeah.
he says I am weird.
I know. That's what I'm laughing at.
So it just hypothetical. It's a little more than just the technical setup there.
Yeah, I agree, and this is why when we're reading our moderators lineup, you notice how Megan's tickers are usually slightly different. Amon's are slightly different. Mike, even Mike, they're slightly different because they're looking for very specific things, or their trading is a little bit different than other moderators, and that's perfectly fine. So if I say something, oh, this one is garbage, I don't like it, doesn't mean that it does not fit your trading plan, right? So keep that in mind. Yeah, over on YouTube, what do we have? GS on earnings. CJ, I don't like GS, man. I have not. I don't think I ever traded this thing successfully. Not that I have traded it a whole lot, but I just usually tend to stay away from it. I think they're so light on volume. I mean, look at this beautiful day here. What is this? Two,
It can
two,
be
eight,
very tough to intraday trade.
right? I mean, only 3 million shares. So you're getting some nice pop here today. Nice break. That's a lot going on. Market is very positive right now. So you could find some moves. But I just feel like it's a tough trade. It's a very tough trade. AVAO, I believe we looked at. Yes, so this is a cash buyout, if I remember correctly.
Yeah.
And yeah, it's just there's going to be better things to trade. We forgot our gap down list, probably because garbage. Let's take a look here.
It is garbage.
AGFY garbage and INPX garbage. I should have just never looked there. All right, let's keep going here.
That was a waste of 3 seconds.
That was a waste of 3 seconds of precious building time. All right, guys. Anything else that you guys like so far? Tesla's looking good. Jared, you in that? Tesla's looking nice. I think we're set, guys. I'm gonna add there's a few more that we can add at usual suspects. I'm gonna bring Apple up to the list because I have a little space here. How about the airlines? Airlines liking what's happening today? Not a whole lot. No, not a whole lot. Okay, excellent. We will stop here. Let's head over to community events and announcements. We will come back and fine tune this list, although it's pretty fine tuned already. I think it just comes down to you picking the stocks that you want to watch this morning based on your liking.
Yeah, every Monday, onboarding and technology with Carlos, 8 p.m. Eastern. Be sure to check that out, especially for newer traders. Tuesdays, we focus on strategy. We got the 5-minute orb tonight, 8 p.m. Eastern, and next week, moving averages with Andrew. He's going to be talking about which ones he uses, why he uses them, and how he uses them. Wednesdays is for psychology. Mike be doing part of his 101 series tomorrow night, how your personal values affect your trading performance. In the following week, Randy Howell, 8 p.m. Eastern, talking about scared money, knowing better but chasing losers. Very important topic. Don't chase. Mentorship every Thursday, 11 a.m. with John and 8 p.m. with Ed. Thor, losing it. Don't forget about tradingterminal.com, our one-stop shop for data and information. You can go to tradingterminal.com 24 hours a day, 7 days a week, and link to the simulator through there. You can go to the stocktradingsimulator.com where you can practice and hone your trading skills 24 hours a day, 7 days a week. If you're looking to try out the room, you can do so. No obligation for 7 calendar days, 5 trading days with the intro membership, and use the promo code PreMarket24 to get a discount off of that. It's not recurring. It is a one-time payment. Will not charge you again. And if you're looking to become an elite member and gain access to all of the info we have here, including all the webinars and recordings of them, use the promo code READ50. You'll also get for half off, you'll also get a one-on-one coaching session with Dr. Kenneth Reed.
All right, Norm. Thank you very much for that. All right, excellent, guys. Let's get to some levels here. And Jack, yeah, the simulator. I think we're doing some upgrades over the weekend, so you might have seen some buggy, right?
Yeah, they try to do it on the most off hours, but I think they were working on some of the upgrades and stuff like that. So if you encounter that, that's what's going on. We're trying to improve it as quickly as we can.
Yep. But glad you're signing on and using it. That's very good. Glad that you're trying to practice on the weekend on your trading. So excellent. All right, guys, let's get to it. Let's get to our list here. We have, everything in the green this morning. Tons of volume. It should be an exciting day. Let's take a look at what the SPY is doing now, as it is up here 2%. And man, just look at the bounce since what's this? This was last week Thursday, right? Yeah. Look at the bounce we're seeing here. Just an insane move. And kind of like Norm was mentioning a few minutes ago, just look at the pop here. We had a aggressive sell-off, and then we are right back up to these levels here almost. So SPY's doing some pretty cool stuff this morning. Very interesting to say the least. Let's see if this can hold. That is the question. Are we going to have a continuation at the bell this morning when the market opens? Are we going to test 380? What's the plan here? Or are we going to have what we've seen before, where we rally in the pre-market and then we give it all back at the bell? So can't wait to see what takes place. We did that on Friday, right? We rallied all morning and then we sold off completely. Not saying it's going to happen again, but it is going to be interesting. Be prepared for whatever can take place here. Definitely exciting, whatever does happen. So let's take a look here. Tesla this morning, guys. Levels towards the bottom, all set. You have everything. Highs and lows of the last 2 trading days. Everything in place there. Pre-market high is going to continue here, so I'm not going to worry too much about that right now. I'm going to look to the left, and I'm going to focus on finding levels on the daily at the moment. And how great were the daily levels yesterday, guys? I erased them already, but if you're watching when we first started, you can go back on YouTube if you like. The levels that we set together in the morning were respected very well in the intraday action on Tesla. They were just like perfect to the T. Here we have 234.28, great level there. You can see a little bit of support, and then the drop off we had here in this market open. Heading above that, we do have 242.27, clearly an area of support until we finally broke down. And that support becomes a little bit of resistance. Gotta move my mouse pad over a little bit. There we go. A little bit of resistance there as well as we just plummet here all the way down to 200. Andrew almost got that. Andrew said at Tesla to 200 and 203.84. Not bad. Pretty close. Looking at towards the bottom of your set, I don't think you need to add anything else here. Well, let's see what the pre-market action does, where it ends. I am going to mark this level here, though, guys. This one right here is going to be a good one. Intraday, 228. And the reason for that is because when you have so much volume pushing through like this, you can set some pretty nice charts like you're seeing here. This is a great pre-market action. And the way to tell a great pre-market action, if you're a little bit newer, is how clean it is. It looks like the market is open, right? That's what you want to see in a stock that's in play. Obviously, the volume helps with that greatly. So this level, you see the resistance, you come right back, a little resistance again, and then the breakout. That could be a nice level, especially if we decide to drop later and use that support. So we will keep that on there. We'll come back and mark down the high of the pre-market as is being developed right now. I'm looking at Neo kind of stuck between the highs and lows of the last 2 trading days right now. We're going to mark down the low of the pre-market at 1249. Hit the highs of 1295, trying to get a 13 here. And you can see here the highs from this week Friday closer to 13 at 12, 13 22 seems like. Above that pre-market high from Friday, we do have 1347. And then in here, we do have another level there, pretty far out, that 1452. 14 might be an area where you kind of can get some resistance. I'll be shocked if this thing can't even get all the way up there. I don't expect that of Neo, unless the SPY is going to go insane this morning on the way up. So that's pretty much it. 1249, 1346, and 1452. I don't think you really need to add anything else at the moment there for these two for this ticker. Take a look at Nvidia. Nvidia again been very active for the last couple of days. High of the pre-market 123.28, so mark that there towards the bottom. You got plenty of stuff in here already, so don't need to add anything else. Even the pre-market low, you have the highs from Friday. They're doing a pretty good job there. If you want to put the pre-market low, you can over here, but I think this is going to be more important on the way down if we do decide to come back down to test that. Over there above the pre-market highs at the moment, 126.62, great daily level, tons of resistance on this level. So you definitely want to have that marked down on your charts. Let's take a look at Amazon. So Amazon right now, man, Amazon is ripping, guys. It's up 4%, 1.1. Volume is there, and it is just tearing the pre-market up this morning. I'm going to mark down this pre-market high because we did get a nice little test. We're going to try to test that one more time here. Getting a little toppy there, but it doesn't mean that we cannot still break through that. But it's worth marking down. And I guess the reason why you're seeing this, because I look to the left now to see what support we have here. There's tons of support resistance on this level, this 118.39 pre-market high that we're marking now. So probably the reason why you're stopping there a little bit, taking a little bit of a break on the way up here. Another level above, that's going to be 120.82. Great area of support, a lot of resistance here. Very clean levels towards the top there. Towards the bottom, below the price action, right in here. This is not a major level, but I do like the fact that there are some days opening, closing around this area. And you have some wicks also slamming against that. So worth marking down 115.54. And then towards the bottom of that, you do have your highs and lows of the last two trading days. Very similar to Nvidia in the pre-market, since we moved up so much already, right? We're up 3.7. That's a big move already this morning. In here, right over here at 117, you do have a nice level that we want to mark down. Actually 117 on the dot, and you can see a little bit of resistance happening there. Finally, the breakout on up over to 118.39. So worth marking that, because if we do come down here below the VWAP and the moving averages, that is something you might want to have there in case there's some kind of support happening there. Is it a bad day for ORBs? We could talk that about a sec. It's a great day for ORBs because I'm doing a presentation today on ORBs tonight at 8 p.m. Eastern time. So it's an amazing day as far as for ORBs. But as far as finding them in the market, it depends. It depends, because what's happening is, let's do levels for Tesla. And we'll get to that. Actually, let's do Apple. That's what I meant. Let's do Apple, and then we'll talk about ORBs. So here's Apple, guys, up 2%, million shares traded, are one of our usual suspects that trades very well. 145.43. Let's go back in there. All right, 145.43. We'll slam one right on there. And then over here, we'll slam another level at 147.55. So two levels there towards the top of Apple at the moment. If we look at anything higher, in case we're going to have a blockbuster day, we're going to have something here at 150.06. SPY must be selling, pulling back a little bit. Yeah, because I see some things are kind of pulling back slightly as well. So SPY hitting the high of 375.30, right? Hitting the high there and kind of giving a little bit of a bounce. Resistance off of that, and then 378 is the most recent highs we have here. So let's see. Gonna be very interesting. All right, so heading back to Amazon, Apple, we are good. Yeah, we are all set on these. I got Apple twice. I must like it a lot this morning. I'm gonna remove it from my secondary list. And there we go. So Tesla, Neo, Nvidia, Amazon, Apple on my main list. This is what I'm going to be watching on my monitor over here. So I see what's happening there. Netflix again, yesterday was just insane. 1, 2, 3, 4, 5. I can actually move Netflix up. There's actually room for Netflix today. Let's move this down, delete it from here. And we have Netflix on deck. Let's do levels for Netflix. Towards the bottom, tons of stuff, guys. Highs and lows for the last two trading days. our low of the pre-market at 247.98, and then towards the top we are looking at 251.24, seems like. All right, so that's Netflix. If we continue here, what do we have? Oh, I didn't know this. Look at Netflix, guys. We're sitting here at a very interesting daily level since the doomsday here, where they dropped drastically. So, very interesting stuff that they've been trying to break out of here for some time. Um, yeah, and we haven't seen. I mean, we haven't seen a Netflix hit anything in between here in a very, very long time. So anything above that, it's a great, great sign. Um, yeah, Ali, I just saw your message there about Netflix. Yeah, this is uh really really good. I wouldn't. You know what? Let's go back. Let's go back. I was gonna say I wouldn't go all the way back to find levels in between here, but let's take a look. We have time 9:04. We got time. I want to see what is in here. You know what? Let's switch to a weekly. Where's my weekly? Here we go. Let's switch to a week. Let's see what do we have in here.
They report
So,
after the bell today.
oh, they do. Very
Yeah.
nice. Oh, it's going to be very interesting to see what they and they have a new CFO, I believe you said, or is it not you, but I think I heard something about a new CFO. I don't remember. 257 and then 266. So those two looking pretty good right there as far as that. All right, let's see how this goes today for Netflix. All right, so we are all set there on Netflix. Reporting plus the way this daily is right now, this is a very good area to be for Netflix this day. All right, excellent, excellent. Yeah, Dylan, Apple was on both lists today. It was a good one. All right, so that's levels for Netflix. That volume that was an 8 a.m. candle. Chris MC, which ticker are you talking about? I missed the conversation. You're curious about INTC. INTC, I mean, they don't have their own thing going on right now. I mean, they're moving with the overall market, and if you look at the volume now, it's a little lighter than many of the stuff that we have on deck. Not that INTC gets crazy volume pre-market, anyways. Their daily looks good
IN-
for a possible breakout. Yeah.
INTC does have a little bit of something going on right now. It's got a mobile. It's got a automated car
Hmm.
division, Mobileye, that they're
Yeah.
spinning off in an IPO, I think next week or something.
Oh,
So
that's
there's
interesting.
some news going on around it, but I think a lot of it is the semi stuff overall.
Yeah, yeah. And again, it's just I think even with the semis, I think you'll find other tickers that are going to trade slightly better. But again, guys, if you like this, so I'm not going to put it on my list because if you look at my list and then you look at Intel, it's like okay, yeah, I see why you're not putting that on there for me personally. But if you like it, put it on the list. If you feel this could be the sleeper for today, right? Because it happens. There's some stocks that don't look great now, and then at the market open, they go insane. And not saying they go insane that they have an explosive open, right? They trend all day, right? INTC is a type of stock that if it picks a direction and it has a good catalyst, it can trend all day in that direction. You can do very well, right? But yeah, based on what I have here and what I'm gonna be looking for, which is the open range breakup on the 5 minute, right? That's my favorite thing. So opening range breakup on the five, not the one reindeer, because the one it requires you to process the decision very, very quickly, right? And some traders are going to be good at that. Andrew's really good at that, processing his decision very, very quickly and being able to trade the 1 minute very effectively. I need a little more candles to kind of develop and give me a story of okay, what's taking place. And we'll talk about that tonight in our webinar at 8 p.m. Eastern time. So if you're an elite member, we're going to talk about the real basics 101 tonight, right? And we're going to answer some questions that I get a lot about ORBs. I have them all in screenshots. So I'm going to take all those questions and we're going to answer some of those frequently asked questions that you might have as well. So don't miss it, 8 p.m. tonight in our webinar room. So, but as far as that, so someone asked the question, is today a bad day for RBs? It depends if things get too extended, right? And that's what happens in this market.
Kind of already there.
What was that?
Go on, but we're kind of already there.
Yeah,
A
yeah,
lot of these
exactly.
days
Yeah,
we've made the big move in the
yeah.
pre-market. Yesterday was an
And we're
example.
done. Yeah. You're right. And same thing happened, not yesterday, was it the day before, where things just ran. I look at my trades from 2020, 2019. Man, I was trading ORBs like a madman. There was ORBs everywhere. And I look at my examples, my screenshots from that time frame and how clean they were to now. They rarely happen now that clean, but there's still some good opportunities. And what happens is if you wait for a 5-minute ORB and you don't get one, you usually find a breakout of a pre-market high, high of the day, low of the day. So waiting, guys, if you're new, especially waiting can be very powerful, right? So definitely be on the lookout for that. You don't have to jump in the first, second minute of something. Especially as you're trying to build your yourself as a trader and your strategy and your trade book. All right, cool, man. What do we have, Norm? Anything else that we might have missed that we should
Got plenty.
get
Throw a
into?
dart and you can hit something with this.
Yeah. Oh, no, I wasn't even talking about. I wasn't even talking about watch lists because I know we have plenty of
No,
those.
yeah, guys, we're close to selling out the Florida workshop. I'm sure. Abiel, can you throw up new link in the poll, or not the poll, the alert section above? And speaking of, if you're going there and you would like to get into a travel setup, we've got some recommendations as well. You can see that banner with the button on it just below the RSVP. You can click there and it will give you, click through to that if you would, Carlos. There you go. It's just stuff that Andrew uses or has used over the years, it might not be the exact same thing because he's, trying to do it where Andrew has some really expensive travel equipment, obviously, for what he has to do and his trading and, how much he trades. But this is recommendations a little bit more budget conscious. And
Yeah, absolutely.
So check that out. If you want to go to the Florida deal, sign up. We've got discounted rooms, $165 a night, roughly, in a room block, but that's limited as well. And only a couple more days, I think we'll have that available. So
I don't think there's been an opportunity to meet so many moderators at one time, including Andrew. So that definitely a nice experience there.
yeah, there's only
as
been
well.
one or two events where we've had this many going.
Yeah. All right, guys, we are looking pretty good. 9:11 as we get ready here to wrap things up. Let's take a look at our moderators lineup and see that coming in fast and furious. Very good. Let's bring that over. And as I'm doing this, guys, if you haven't done so already, it's a great opportunity to show your support for our channel as we try to grow to 100,000 followers. If you are not following us, help us there as well. If you like the content, of course. So thank you. And hit that thumbs up because, again, it does help us to reach our goal of 250, 300, and 100,000 followers. So thank you for that. All right, let's get into...
One thing real quick. Somebody's asking about the hotel. It's a little confusing because there are two Westins in Fort Lauderdale. It is the Westin Fort Lauderdale on Corporate Drive. It is not the beach resort. The address is on that page. So bearbulltraders.com/workshop.
Excellent. All right, guys, here we are. Let's take a look. So Thor will be looking at the overall market today, the Qs and the SPY, Netflix, Johnson & Johnson, secondary list NEO, XBEV, and CCL. Mike will be looking at Tesla and Netflix, Susan, Netflix, Tesla, SPY, Apple, and Maggie will be looking at Netflix and Tesla as well. So pretty fine-tuned list there from our moderators. As we get ready to go live in a couple of minutes here. Brian will be up next with Andrew Trading Live. I'll wait for Brian's list, see if he's around to put his list together, and then we'll shoot that over to you guys. Other than that, guys, we are pretty much set. BBBY is in play? Well, no. Well, they're overall market stuff, but I see what you're looking at, right? This thing has been beat down quite a bit as well. Just in my opinion, Mondays and Fridays are best for ORBs. Melanie, it could be. And if you have that, see, capturing data It's very important. So if you're capturing that data, you're able to say, you know what, based on my trading, these 2 days are the best. And, that's good information to have. Maybe you want to skip those strategies on the other days, right? So yeah, so this is why journaling and having that information, knowing what you're good at, is gold. Because if you have that information handy, it can make you an amazing trader. And that's, you got to put the work in, guys. I mean, trading is not easy. If you want to just show up, come in here and think it's just going to wing it, no, it's got to be work put in on the back end, tracking, journal. It's not all bells and whistles and walk in the park type stuff. Brian, CRM, NJN, that's it. Oh, Brian has a
J&J.
very
Wow.
very small list. J&J has something going on today. I see a
Yeah,
few
they had earnings this morning.
earnings. Oh yeah, started to move here. Let's put that as a pass. So I'm not a huge fan of it, but I like to see what it does when it has earnings this early on. Already starting to see a little bit of some movements happening here, guys.
Real quick.
Yeah. 9:15, guys. Have an amazing day. Remember, ORB webinar tonight at 8 p.m. Eastern time. I know we're just going to talk about the basics, but still, if you've been around for a while, you want to come down and hang out with us, please do so. It'll be fun, and we'll have a Q&A towards the end to talk anything ORB or anything trading. So take care, guys. Trade safe, and I'll see you tonight. If not, over tomorrow on YouTube. Thumbs up and subscribe.
You got it. Take care, guys. Trade safe. Yeah, J&J's probably started turning down in the last 10 minutes because they're on their conference call right now. So they're probably and they're
Okay.
toward the end of it. It started about 45 minutes ago, so they're probably in the Q&A. As I've mentioned, a lot of times,
That's
the
when it gets
CEO can pump whatever, they can say whatever, if they can phrase it however they want. But then once they get asked questions and don't have a,
clear answer,
formulated response, and they're kind of on the, they're kind of stuck. They might say something that causes that. So
cause a little a fumble action there.
Yeah.
All right, guys, take care. Have a great day.
Take care, guys. Trade safe.